record. All right, so I'm pretty sure you've already if Tally hasn't told you this or you haven't been figured this out through Cam, I'm gonna just go ahead and tell you right now. This strategy is based off the pump and dump schematic
Mhm.
or the dump and pump schematic. Now that is either a trend or a reversal, doesn't matter. So what you'll come to find out is that no matter if it's over 3 days, 3 sessions, 3 hours, every single setup will culminate in either a pump for a dump or a dump for a pump. The main thing that we'll be identifying or spotting is lower lows on the inside, or what I like to say, the backside, which is the recipe for the pump and dump, or the lower low, lower high, lower low continuation, or higher highs on the backside, which is the recipe for the higher high, higher low, higher high continuation. Now, target, a minimum target is always where the pump began or where the dump began, whether you're buying or selling. And this is a three-step process. So this could be, once again, this could be 3 separate days here. Day one, Monday, could be pumping or buying. Now, we're necessarily not doing anything. Now, the basic model is actually trading Wednesday and Friday only. That's the basic model.
Mhm.
Now, once you get the grasp of that, you'll understand that, okay, you can get a Tuesday, Wednesday, Thursday. So what I'm speaking of is a 3 day setup.
Mhm.
Setups that accommodate over 3 days. It could be Monday, Tuesday, Wednesday. So this could be Monday. This could be Tuesday. This could be Wednesday. Same here for the buy low. Monday, Tuesday, Wednesday. This could be Tuesday, Wednesday, Thursday. It could be Thursday, Friday, Monday. This could be over 3 sessions, Asia, London, New York. This could be New York, dumping down, Asia, London. So any three combinations over 3 sessions or 3 days will accommodate in either a pump for a dump or a dump for a pump. Now, the terminology is slightly confusing to some, but I'm just going to go ahead and tell you now that peak formations is how you will identify these templates or these setups. So for a pump and dump, step one, I need a peak formation low, which all it is just a low during this day or session. So if this is Asia, I want to see Asia give me a low of day and start pumping. I want to see London give me a high and start breaking structure or shorting. And I want to see New York give me lower lows on the backside, which is the recipe for the lower low, lower high, lower low continuation.
Mhm.
Vice versa for the dumping pump. I want to see a peak formation high first, whether this is day one or session one. Peak formation low, session two or day two, and higher highs on the inside or the backside, session three or day three for the move back up. Now, what you're looking at right now, this is literally it. Now, there's going to be a lot of terminology to learn, such as peak formations, high bull, low bear, which is the highest bull candle. That's how I know this is a pump and dump, or the lowest bear candle. That's how I know it's a dump and pump. The high bull will act as a level of resistance. I'm just going to put this as R.
Mhm.
The low bear or the lowest bear candle will act as a level of support. Now, you've probably heard the term order block before.
Yes.
That's pretty much all it is. But for us, it's the highest or lowest bull or bear of the day or the week. So we're going to have to wait for them to start failing and reversing, breaking structure, failing and reversing. So once again, just to reassure you, these two templates, this is it. This could be with the trend, this could be against the trend. Everything is quite literally a pump and dump or a dump and pump. So I'm going to give you a hypothetical here. Let me just draw some separators here. And this is going to be for the week. The first thing that I'm going to mention is the first red day and first green day, because usually that's where most traders start off. And that's where I would suggest starting off with the strategy, the first red day and the first green day. Now, let's just say this is our Monday. Monday starts pumping up and they close. This is the closing price, which this is a level that we're going to be using. This could be a level of support, resistance, or a magnet. Now, if you're lost right now, just follow along. All of it will make sense, but we just got to get past the nitty gritty at first. So,
Mhm.
starting you off with first red day, first green day, everything is either a pump for a dump or a dump for a pump, whether that's a trend or a reversal. So, day one or session one, you need a pump day. Be sure Cam made that clear. You need a pump day. Day two, you need them to close below the closing price. That is a first red day signal. Now, the following day, just going to mark off these levels here. Now, the levels I'm marking off are the previous day high and low levels and the previous day closing price level, because those three levels are the only levels we will be looking to enter the market from. This is the best part about the strategy because I get this question a lot. Hey, Snipe, what about entries? Can you go over entries? And if anyone is asking me about entries, I know that they don't understand trade setups yet,
Mhm.
because a trade setup or a parabolic trade setup, like Stacy teaches, it doesn't matter where you get in. And here's why. So, first red day is a signal for a pump and dump template. The third day or the trading day, essentially, we're going to be looking for a pump, 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 breaking structure for the pump and dump continuation. Now, the thing is that we're going to be drawing levels across, closing price levels across, previous day levels across, and here's why. This is why the closing price is important. The closing price is where positions are placed, and we're talking about the big boys. These are where the positions are being placed because once again, these setups are based off of the daily time frame. So everything starts from Friday's close, which is the previous week's closing price. All we know is that there are positions here, buyers and sellers. We do not know anything until the close of Monday. So Monday closes as a bullish day. So what does that tell us? It tells us that there are bulls or buyers in the market. But we have a close underneath Monday's close. What that tells us is that if you bought the closing price, you're in drawdown. If you sold the closing price, you're in profit. But we're focused on the buyers because first red day is a buy trap. They're trapping buyers above the closing price. First red day signal, they pump it up for our pump and dump trade. Now, once again, no matter what trade setup we're looking for, there's only two types of templates: pump, coil, dump, a one, two, three, or dump, coil, pump, which will be a one, two, three. This is a pump, coil, dump template. One, two, three. Your entries will be whatever session you're trading. So let's say this is GU. I'm just gonna circle this as the Asian session. This will be the London session. And this will be, whoops, didn't mean to do that. Whoops, one second. This will be the London session. And this will be the New York session. Whatever session you're trading, and since we're focusing or hypothetically speaking of GU trades in London and New York. So if you're trading London, you're trading or you're getting in from this level, engulfments, pin hammers. If you're trading New York, you're getting in from this level, engulfments or pin hammers. So this is the first red day template. But just to go back slightly, and I'm going to go back slightly, every single day we will have a previous day high level, a previous day low level, and a closing price level. These three levels are our reference point every single day for trade setups. So we can get a market that breaks out, pulls back for a trend. We can get a market that breaks out, fails to go higher for a reversal. And even still, the trade or where you're going to get in is going to be at this level. We're not looking to trade or pick tops. We don't care about getting in first, which you can. Uh, but that doesn't necessarily matter because this trade system, you're trading from level to level, whether that's high of day to low of day, whether that's closing price to low of day, closing price to high of day, high of week to closing price, or high of week to low of day, low of week to high of day. We're trading from level to level. But all in all, markets only do three things. They break out, pull back, and trend, break out, fail, and reverse, or they will stay in a trading range. And in trading ranges, once again, I leave these alone. But if you're going to trade a trading range, the one or two things that you're going to have to focus on is selling high, buying low, or waiting for them to break out first. Because when markets break out, they only do three things: breakout, pullback, trend, breakouts, fail, and reverse or range. Now, if we're coming out of a trading range, really they're only going to do two things. They're either going to give the range reversal back to the low, or they're going to expand the range for a trend trade. They're going to break out. So market structure is really important. So if we go back to our template here, or actually before I do that, every single day, this is our reference point. And as a matter of fact, let me just redraw this. I'll redo the weekly template. This is going to be our previous week high, previous week low, and our previous week closing price, which we're good. We're just going to say it's down here. I'm going to split this up in a few days, and we're going to talk about the first red day and first green day. Once again, I'm going to draw our daily separators here: Monday, Tuesday, Wednesday, Thursday, and Friday. Monday, Tuesday, Wednesday. 1, 2, 3, 4, and 5. Now I know I may be moving slightly fast, but
No, no.
okay. Remember, there's only two types of trades: pump and dump and pump. So let's just say once again, Monday gives us our pump day and they close. That's our previous day high level here, previous day low level, and we have our closing price, which remember is our reference point for our trade setups. Day two, we get our first red day signal and they close. We get our previous day high level, previous day low level, closing price. Here's our reference point. And we get our first red day trade. They pump it up, which this is one hypothetical scenario. They pump it up for a dump. This is a high of day reversal, but they pump it up for a dump. The trade came from or
Mm,
levels. That this is where you're getting in. You do not have to pick tops. As a matter of fact, we're not even looking to do that. We're looking for confirmation that the high is locked in. All that means is that there's going to be price action up top to confirm that this is a lower high. We have our lower low or our breaking structure, lower low, but we need confirmation that this is a lower low, lower high, lower low continuation. There's going to be price action, which we're going to talk about, that's going to confirm this as a lower high. And we're going to get in after they have confirmed that the high is locked in. That way, we don't have to worry about getting stopped out, stop hunts, pullbacks, etc. Now, this is one hypothetical. Another scenario for first red day is that we will get a breakout, then a pullback for our continuation. This is a lower low. So whenever they breach a previous day level, that is a higher high or a lower low, a real one. Now, mind you, yes, this is a lower low, but they did not break the previous day's low. So what does that mean for us? That means that their shorts are not in the market yet. The reason why we're paying attention to the previous day level is for this very reason. When they breach a previous daily level, that means that 15-minute, 1 hour, 4 hour, and daily time frame traders are in the market. Everyone's in. Big banks are in. Institutions are in. Intraday traders are in. Everyone's in. So if they're going to trap traders, they want to make sure that they can trap as many traders as possible. That's the liquidity needed for either a reversal or a trend trade. So they trigger breakouts here and they close below the open. Who's trapped? Longs, buyers. They trigger shorts. Who's in the money? Who's driving the move? Higher time frame shorts. Where do we get in? From our levels. Now, I'm going to draw up the first green day. And mind you, this actually does happen. So I'm not randomly drawing markets. I'm not randomly drawing lines or whatever. This does happen. We can get our close. They close. And Thursday can be quite choppy. One second, let me draw our levels. There's the previous day high, previous day low. Thursday can be choppy. Thursday is a day too. We'll get into that. It can be choppy, but they close above the closing price. That is considered a first green day, not only because they closed above the open, but because we already dumped down and we are now on the back side of the price action. Very important. Reversal trades happen on the back side. Trend trades happen on the front side. So from the front side, I will be looking for a continuation. Or on the back side, I will look for a reversal that can be up or down. We are on the back side. Whoops, excuse me. We are on the back side of the down move. There's just absolutely no way I will counter trend. Or excuse me, there's no way you can go short, continue a trend on the back side. It doesn't have, you can actually mark up your charts. You can mark up many charts and you will never find a trend continuation trade on the backside. It just doesn't happen. That's why in that video I said if you don't understand market structure, you're almost doomed because the market can only do three things. And not only that, the market is pretty limited. So it's not random. The market can only do certain things. So for our pump and dump, we got our step one, our step two, day two, and our step three. But for our dump and pump, we already have step one in place. We already have step two in place. Now, remember what I said about higher highs and lower lows? A higher high is when they break a previous day's range. So the next day after the first green day, what am I looking for? I'm looking for them to break out, pull back, and trend for our first green day trade back. where the dump began, higher high. Now, I actually have very strict rules, and I only have three rules. And I'm going to type that out for you really quickly. Rule number one, higher high equals dump and pump. Lower low equals pump and dump. Rule number two, front side equals trend. Back side equals reverse. Rule number three, the buy low setup is a dump, coil, pump. Oops. The sell high setup is a pump, coil, dump. These are my only three rules. Now, we're going to be using signal days for a bias and setups, whether that's a trend or a reversal. First red day is a sell high setup. First green day is a buy low setup. 3 days of breakout traders. That can be that is a trend or reversal trade. So, first green day is a buy low. That's one direction. First red day, sell high. That's one direction. 3 days of breakout traders and the closing breakouts. Both of those are either a trend or a reversal setup based off of the price action, based off of if you are on the front side or back side of the actual pump or dump. Do we have lower lows on the inside? Do we have higher highs on the inside? Are we on the front side? Are we on the back side? And what is our overall thesis? Also, the inside day, because that's the final signal day, the inside day and the outside day. Inside day slash outside day, which we'll go over that, is also either going to be a trend or a reversal setup. The first red day, first green day is more so a directional bias signal, which the best ones will give you the trade the next day. But there will be certain occasions where the trade won't actually come until 2 days later, sometimes 3 days later. Uh, can you hear me? Because my
Yes,
earphones just died. One sec. Let
it's
me put them
fine.
on the charger. Oh, wait, you can still hear me, right?
Yes, I can.
Okay, one sec. Let me on my case. Okay, so I'm gonna leave those to charge really quick. But we have signal days, we have rules in place, which is very important. As a day trader, you need rules, you need restrictions, you need setups, you need signals to tell you when to get in, when to get out, when to stay out, when to do absolutely nothing. And just a reminder, it's either going to be a pump and dump or a dump and pump. And just to add a little fun to this, uh, I call this the Dracula house mansion pattern. because this is just a house. We're looking for the market to build the house. We're building the front side of the house. Once they put the highest peak in place, you'll see lower peaks to complete the house. Most mansions or the castle-like mansions, after the highest peak, because this is just basic um, symmetry, you're
Mhm.
going to see lower peaks on the other side of the house. This is basic symmetry. After the lowest peak, you're going to see higher peaks on the other side of the house, on the back side of the house. So we're looking for the house, we're looking for the mansion. It's a pattern that we're looking for. So it's not just random price action or just one, just engulfments, just this, just that. We're looking for very specific behaviors of price, very specific patterns. That's it.
Mhm.
So, any questions so far? I'll
Mhm.
just give you the next 5, 10 minutes to give me your thoughts. Uh,
Um,
questions.
okay, I have one, I think. So I know like I hear or I see about the 3 day setup, but then what if it continues more than just 3 days?
Okay, if it does, good question, which it actually can. I'll
Mhm.
actually give you a hypothetical. I'll actually give you an example. Gold this week. We got an inside day signal. And what is an inside day? A day that stays inside the previous day's range. The next day, we got an outside day. What is the outside day? A day that triggers both sides, the low and the high, or the high and the low. But we got higher highs on the front side of the market. I am thinking dump and pump. And that's exactly what happened. Dump and pump. Higher highs, closing breakout signal. I am thinking dump and pump. Once again, day two, higher highs again, closing breakout. I am thinking dump and pump. Day three. So they just keep going higher.
Mhm.
And we're still on the front side up. I will not counter trend this market. So I'm just going with the flow of the market. Front side equals trend. I will only look for reversal if they do this, which they did not. We did not get a lower low on the backside. We did not trigger a previous day's low. Not one time. So I'm just trading with the trend. Now, a closing breakout is a day that closes above the previous day's range, above or below. So this is the previous day's high, and they close above it. That's a signal for either a large trend or reversal trade. Now, I'm just going to skip to the future really quick and answer the question that I commonly get. How do we know it's a trend or reversal? And the answer is, what are they doing? Are they dumping for a pump or are they pumping for a dump? We get a closing breakout. They dump, coil, pump. Closing breakout, dump, coil, pump. Closing breakout, dump, coil, pump. Closing breakout. Now, if they reverse, what they're going to do is they're not going to dump. They're going to go sideways, break structure, and reverse on the backside of the actual pump. So if they do reverse, this is what they're going to do. On the backside, they're going to break down, give lower lows, on the backside.
Mm.
That is the recipe for you guessed it, pump and dump. Backside equals reverse. The sell high setup is a pump coil dump. Signal days, one of these. Now, I'm not going to go over this just yet. We're going to add that as our understanding grows. But remember, the market can only do three things. We have signal days to identify setups. I have three very, very strict rules. Very strict, very concrete. You cannot mess this up. If we're on the front side, the only thing I would be looking for is a trend trade. If we're on the back side, so each week I'll reset the template. So notice how we got lower lows and the market's going down, right? Lower low, lower high, lower low, right?
Mhm.
We break structure. We are now on the back side of the week. They give us a higher high on the back side. That is the recipe for the dump, coil,
Mhm.
pump. This was not random. I used to think news was random. Now I know news is very well engineered. So I can go back even more. I'll give you a better example, a cleaner example of front side, back side. Monday closes in breakout. That's a signal. We get higher highs. What am I thinking? Dump, coil, pump. We close and breakout again. That's a signal. We get higher highs. What am I thinking? I'm thinking dump, coil, pump. But what ends up happening is they break out, they pull back, they fail to go higher. They give us lower lows on the inside, on the back side of the actual pump, and they reverse. So what is this? This is all this was a textbook basic pump and dump template. And then they continued to break down because we were getting lower lows. What does that equal? Lower lows equals pump, coil, dump. This was
Mhm.
also a closing breakout because they closed below the previous day's range. That's a signal for either a large range trend trade or a large range reversal trade. So I will also say this. If first green day, first red day is your trade setups that you're looking for, only look for that. Only trade that.
Mhm.
Don't do anything. So if they go higher, leave it alone. If they go lower, leave it alone. Now, there are other signal days that we can learn or that you could trade. Here was our first red day here. We're higher highs on Monday, we're buying. Higher highs on Tuesday, closing breakout, we're buying. Higher highs, closing breakout on Wednesday, we're buying. We finally close below the closing price. What is that? A first red day signal. And they give us lower lows the next day, which is the recipe for the pump, coil, dump setup. All this was just one big old 1, 2, 3. Remember, it does not matter. Everything is either a pump, coil, dump or a, if I reverse this, dump, coil, pump. Whoops. Here's where the dump began. Dump, or step one. Step two. Step three. Dump, coil, pump. It does not matter. Pump, coil, dump, coil, pump. 3 days, which, mind you, this was longer than 3 days. This was like 5 days, which
Right.
it can happen. It can happen over multiple days. But what are we waiting for? We're not looking to read the market. We're not looking to guess or predict where the market is going. We're looking for signal days. We wait for a signal day, first red day, first green day, inside day, outside day, closing breakout, etc. First red day signal. Okay, now I'm paying attention. I'm waiting for lower lows because that's the recipe for the pump, coil, dump. Lower lows, pump, coil, dump. Setup. Higher highs on the front side. That's the recipe for the dump, coil, pump. Pullback, trend, pullback, trend, pullback, fail, and reverse. Breaking structure, pullback, trend, pullback, trend, consolidate, trap, reverse. So we actually can see that they're somewhat breaking structure. So what I need them to do is give me a higher high, which is the recipe for the dump, coil, pump setup. So once again, what are your thoughts, questions?
Another question. So when obviously the market could do whatever it's going to do. So in a situation where you get the first red day or that first green day, and you're looking for like the first red day, you're looking for it to pull back and then dump down. What if it doesn't do that? It just continues to go up. That would be just continue like a trend trade or
So you do nothing.
do nothing. You
Yep.
just follow. Okay. And you just follow and see what it's going to tell you after the fact. If it's going to go back to a first red day again, it's like it does it reset? Like that's what I'm trying to understand.
Okay, so this is actually what I've noticed one of the hardest parts for traders to overcome, and that is shutting off your analytical brain
Mm-hmm.
because I'm not trying to read the direction. I really don't care where the market's going at all. It took me a while to get to this point, but I do not care what they do, where they're going. So I look for signal days, and there's actually a way to know if your first red day is actually going to be a good one. So you get the pump or the peak formation low, day one. You get the peak formation high, day two. Day three, we're breaking structure for the pump and dump. This is what it's gonna look like over a larger time frame, 1 hour, 4 hour, etc. But on day three, what's actually so funny about the first red day or markets in general, because markets are fractal. What's funny is on day three, because this is a 1, 2, 3. On day three, I am looking for a Asia, London, New York on day three, which is that right there.
Mm-hmm.
So over the bigger 1, 2, 3, I'm looking for a smaller 1, 2, 3 on the day. Now another variation is where they actually break out, pull back, and trend. That's different. So there's slightly different variations that first red day will do. This is the best, most high possible probable situation, an actual pullback or a pump and dump scheme over 3 sessions, which I'm gonna show you an example of that. Let me brainstorm really quick. The last time I seen that was one sec. Let me give you a textbook. Well, here's one right here, actually. Didn't even have to look that far. They pumped it up, closing breakout on Friday. First red day signal on Monday. Now, the very next day, and mind you, this is slightly different, but it's the same exact scenario. Asia is my low. London is my high. Mind you, I am not reading the zigzags. I am not reading the bars. I don't do any of that anymore. I used to.
Mhm.
Stacey used to talk about this all the time. Stop trying to count the pushes. Stop reading the candles and just look for the setup. So here's my one. Here's my two. Now we're on the back side. Now I get a lower low. That's my three, which is the recipe for the pump and dump
Mhm.
template. Where do I get in? Now, normally I would tell you again, get in at the closing price. Get in there on a smaller time frame. But in this case, I actually do use the major round numbers, the major round quarter levels,
Mhm.
double zeros, which here's the double zeros. Here's 75. Here's 50, 25, 0. Now the best numbers or levels, quote unquote, to enter a market are zeros and 50s. We haven't got into this yet. So
Mhm.
I am kind of I'm taking a risk by actually talking about this right now because I don't want to cram you. But zeros and 50s, because you mentioned entries earlier.
Mhm.
Zeros and 50s. That's where I'm getting in. Look at this. This was at 50s and closing price. Bang. This was, I mean, if you're trading this, this was at 50s. This was at zeros. This is 50s. This is zeros. This is 50s.
Mhm.
Best places to enter a market is zeros and 50s. 50s. And it is dead accurate. It's crazy how accurate it actually is. This is where the big banks or the big boys, this is where they trade off of zeros and 50s. Now you have a 100 pip box. So every 0 to 0 is 100 pips.
Mhm.
And you have a 1,000 pip box, or would be considered your $100 box. So the regular 100 pip box, that is a $10 box. Your 1,000 pip box is a $100 box. So each quarter level is 250 pips. So
Mhm.
from 0 to 0, that's 1,000 pips. This is the zeros on the 1,000 pip box. How do I know? Look at the number,
Mhm.
zeros. This is the quarter level, 25. This is the 50 level. So zeros and 50s. You can also enter positions at quarter levels because the market trades from all of these levels, honestly.
Mhm.
But the most high possible probability situations are where you're coming off of a 0 or a 50 level. And mind you, most or the majority of your setups will either come from the previous day's low, the previous day's high level, or the closing price level. So this is where we're getting in these levels. You're going to absolutely love this strategy once you really get the hang of it because it's no thing it's designed for you to not think, no
Mm.
stress. I took this trade on Friday and I did this live. Can you guess where I got in?
At the closing price.
Correct. Bang. Did I care about picking the bottom? Absolutely not. That's ego trading. Now I
Mm.
used to, you know, try to pick bottoms and tops and try to be the cool guy, but behind the scenes, I probably took like 10 losses before it actually started moving.
Right.
Now I will just get in at a level, take that one trade, and be done.
Mm.
I took this trade too. Look where it came from.
Mm-hmm.
And I was live on Wednesday too. And guess where I took it? From that level. That's the previous week's high level, by the way, that blue line.
So you do live trading? I didn't know that.
Yep, on Wednesdays and Fridays.
Oh, okay.
If you're not in the VIP, that's what I'm gonna have to do. I'm gonna have to add you in there.
Okay, I don't know. I don't think
Yeah.
so.
So I send a Zoom link in there every Wednesday, every Friday, and we trade the New York session.
Oh, that's cool.
I will tell you, I am very obsessed with gold. So the
Okay.
majority of the time I trade gold, but this strategy works on any pair, quite literally, any pair. NASDAQ, natural gas, GU, crypto, doesn't matter. These setups and trades come off of levels. What level is this? This level was the previous day's breakout level. Why did I draw this level across? Because we got our closing breakout signal. Whenever you get a closing breakout, draw the breakout level across because there's only two things the market will do. Retest it for a trend or retest it for a reversal.
So real quick, when you say previous day, like okay, right there, the last circle you drew, that's current day. So previous day would be not that day, but the day before.
Correct. So or the prior day's range. So this day is Thursday right
Hmm.
here. This is Thursday. This is the previous day's high, previous day's low. But whenever you get a closing breakout signal, you draw the breakout level across
That makes sense.
reference point
Okay.
because they're either going to pull back and trend or they're going to break down,
Hmm.
fail, and reverse. Now, you want to know what's crazy is there was a bunch of SMC and ICT traders that took this trade. But the reason why they took this trade, they said, "Oh, we got SMT on the Dow Jones and the S&P." There is no reason why you should be looking at other pairs to trade this pair.
Yeah, right.
Like to me, that's just ludicrous. The indexes are brothers and sisters. So yes, they follow each other. Yes, they have similar templates, but you do not need to be looking left and right to make a decision on one pair
Hmm.
because this is the NASDAQ. It traded from a level. Let's go to the Dow Jones. It traded from a level.
Hmm.
Let's go to the S&P. It
Hmm.
traded from a level. All you had to do was get in at the level
Right.
or get in at the next level if you missed that one. If you miss the first train, there's another train. If you miss that, get in here.
Hmm. Yeah,
It's less risk to reward, but you can still get in. So,
makes a lot more sense because I listen to your videos and I read in the chat when you guys talk about levels. I'm like, okay, I get the levels, I understand, but I wasn't looking at the previous day level correctly. I was looking at like just one day before, like yesterday, not 2 days.
correct.
So that's where, okay, that makes a lot more sense. That's why I'm like, I don't see what level you guys are talking about, but I see
Mhm.
that. Okay, cool,
Yep, yep.
cool, cool, cool.
So, this is actually a lot for
Mm-hmm.
just
It
one
is.
day. But you'll be able to rewatch the video. I'm actually gonna end the recording here.
Okay.
Let's see.